Okay, and welcome back, students who are taking financial accounting, and we are working on the Chapter 3 exercises, the Group B exercises that are assigned in your digital study guide. If you watched the previous video for exercise 3-30, you'll realize that I had said I had a little difficult time with this next problem, which is 3-31. And as part of that, I had said, when it comes to accounting, yeah, all right, let me just back up and tell you what happened. I was creating a video and I had worked all the way through 3-30 and I had some time left and I thought I'd do 3-31. Now, it's not that I don't understand the concepts. I mean, obviously I do. I've been doing this for 30 years. But when I started working on 3-31, it started to confuse me. I didn't understand the application of it. So what ended up happening is I ended up stopping the video and having to trash it. And then I had to create a new video, which was the video for 3-30. And now this one here is for 3-31. But the reason why I'm telling you this is because when you're working through a problem, remember, accounting is about understanding concepts and then applying those concepts. If you're not getting a problem, you can say, well, it's my application, and I say, okay, pause the video and rewind it and watch it again, right? But if it's an application issue, then sure, you can rewatch this portion of the video in order to be able to understand how to apply the concepts if you understand the concepts. If you're not understanding the concepts, no amount of watching application is going to help, okay? Which means you end up having to go back and rewatch and study the theory, what's in the textbook, the additional theory videos that we put up on the student community, or the introduction to accounting and bookkeeping videos. So if you're not getting something, it doesn't necessarily mean you can watch the same video, this particular problem again and again and again. If you're not getting it, then it's a matter of you don't understand something, and you have to go back and watch the theory videos. Now, if you understand if you're still getting lost or whatever have you, I mean, that's what instructors are for. You can contact us and try to help you understand so that you can apply them to the situation. Okay, so with that said, here's 3-31. All right, and it says here, adjusting entries, the adjusting entries for the following adjustments were omitted, and that's at period end, and that's where I had gotten stuck. Okay, like I'm trying to work through this and I'm like, what's going on here, right? Because I had realized that these entries were not made. Okay, that one word confused me. I mean, I just skipped right over it. All right, and remember, I try to work through these problems just like I'm a student. Okay, so as you see me scribble and everything like that, I mean, I'm doing this just like a student. I'm going to be scribbling, all right? And I'm babbling and trying to bring things, additional information, my own experience to the videos. If I wanted to make these professionally, I take a hell of a lot more time, and you'd see real nice, PowerPoints and graphics and whatever have you, but that's not the reason. The purpose behind this is to work it as a student so that you get into my mind, and be able to see how it works. And I had originally just went right past that word and didn't even think about it, okay? So in this case here, they were omitted, meaning they weren't made, so whatever accounts that they affect, those balances hadn't been changed, okay? It's as if I had, you have a pre-adjusted trial balance, and that's what I was using, the pre-adjusted trial balance. Well, I need to make the adjustments and then work from an adjusted trial balance. I wasn't making the adjustments in my mind because they were omitted, okay? So it says here, compute the amount that the net income for the year, all right, the net income. So here's pre-adjusted. Then I have my adjustments, and then I have my adjusted trial balance. Pre-adjusted trial balance, I make adjustments, and I have my trial balance. If you go back to the theory videos, you see me discuss this about the worksheet. So when you have your adjusted trial balance, from there you can create your income statement, okay? So that's where we're at. This problem is saying compute the amount of the net income. We're computing the amount of the net income on our income statement. But the thing is that these adjustments weren't made. So these balances are all wrong. Okay? Because why? These balances are the same balances as our pre-adjusted. All right? So it says compute the amount of the net income for the year. That net income for the year is overstated or understated for each omitted entry. Okay? And then use the following format to analyze the transactions. Okay? So in other words, on our income statement we have revenues less expenses gives us our profit or loss. And what we're doing is we're trying to say, okay, is that profit or loss overstated or understated, and by how much? So for letter A, it says prepaid rent expired. Okay, all right. So if my prepaid rent amount had expired, right? So I have this amount of money, and it's expired. That means I should have made an entry to reduce the prepaid rent, and that would increase my rent expense account. Or in other words, my expense account would have increased. And if my expense account increased, that means my profit or loss would have decreased. So, if you need to, all right, my profit or loss would have decreased, which means that by not making the entry, the profit or loss is overstated. Okay, so overstated by the amount of $1,400. Okay, now in order to be able to see that more clearly, stick some numbers in. Okay, let's say the prepaid rent previously was 1,400 times 3 is 5,200, right? Oh, 4,200. Okay, and if I didn't make the entry, I just arbitrarily said, okay, 1,400 times 3 months of prepaid rent, which gave me $4,200. Okay, so I could have made that 6 months, I could have made it 7 months, it doesn't matter. Okay, what matters is that I have a prepaid rent amount of some figure. Okay, and in this case here I'm calling it 4,200. Remember, I'm just sticking numbers in order to be able to understand what I'm doing here. Okay, the numbers you use, it doesn't matter. What matters is the relationship between the numbers. So if I have a prepaid rent amount to begin with of 4,200 and I do not make the entry, okay, for prepaid rent, if I had revenues of 100,000 and I had expenses of, say, 60,000, that means I'd have a profit or loss of 40,000. Now, if I didn't make the entry, I'd have expenses of 60,000. But if I do make the entry, that means my prepaid rent would be $1,400 less, okay, which means it would be $2,800, and my expenses would have increased because why? I credit my prepaid rent, and I'm debiting rent expense. All right. Go back to exercises. Let's see here. Yeah, exercise 3-30, all right, and making these here, journal entries, okay? Go watch that video to see those journal entries. I'm not going to repeat making them here. Right? But anyway, so I would credit prepaid rent and I debit rent expense. So my rent expense, in this case, would now increase from 60,000 to 61,400. Which means now instead of having 40,000 as my profit or loss, I'd have 38,600. So the relationship here is, on my books I have 40,000. It's overstated. I should have 38,600, and it's overstated by the amount of $1,400. Okay, So I'm going to erase all of this, but that's the thinking process that we're going through and working through the rest of these entries. Okay, and I'm going to keep that right there. I'm going to get rid of this. So that was A, and we'll use this these numbers for the income statement in order to be able to work through the rest of these. So for depreciation, what kind of entry would I have made? Well, my depreciation expense would have had whatever amount in it, okay? And if I'm supposed to depreciate it 2,600 and I didn't, okay, if I did make the entry, I'd increase my depreciation expense by 2,600, right? Well, since I didn't make it, that means I have 60,000, but if I had made the entry, I'd actually have 62,600, the 60,000 plus the increase of 2,600. So when I subtract that, obviously I get minus 626. I'd end up with 3,740, 37,400, which obviously what I had before is overstated. All right, so for the depreciation for B, I'm overstated by the $2,600. Okay, so that's B, and you're going to find that if you understood my explanation for A and you just saw me do B, right, you're going to find the rest of these are a little bit relatively easy. Okay, so salaries owed, right? Well, if I owe it, that means I don't make that entry. I should have made an entry to credit my salary payable and debit salary expense, right? And if I'm debiting salary expense, I'm increasing it by $3,750, okay, which means I don't have the $3,750 as part of the 60,000. So if I make the entry, I end up with 63,750. And again, because that increase, that means my profit or loss is going to be less than the 40,000, which means, by not making that entry, I'm overstated by the $3,750. Okay. And notice what I'm doing. I'm just plugging in the numbers here, okay? And if you're not getting it, plug the numbers in yourself in order to be able to work through the problem, in order to be able to understand, what's going on. You do that an awful lot with accounting. It's one of the tools. You have a situation, but to better understand it, just plug in numbers in order to see and understand the relationships. Okay, supplies used during the period. So if I had a supplies account, let's say my supplies account had, say, $5,000 in it, okay? And when I go to do the inventory, I actually have $4,550 in it, right? Which means I needed to make an entry to decrease it by $450, okay? So I would, since supplies is an asset account, that account has the normal balance of a debit. That means I'd credit supplies account for $450 and I debit something else. Well, I debit supplies expense, right, for the $450. Well, if I'm debiting supplies expense, that means I'm increasing my expense. So if I had 60,000, now I have 60,450, okay, which means that I'd end up with less, subtracted from 100,000. My profit or loss is going to be less than the 40,000. So that means by not making that entry, I am overstated by $450. Okay. Right, and the last one here is, let's see here. Okay, unearned service revenue now earned. Okay, now notice that A, B, C, and D were all dealing with expense accounts, right? And because we didn't make the entries, that means our expense accounts were all understated. Okay, it means we didn't put enough in it in those expense accounts, and because there wasn't enough in the expense accounts, that made our original profit or loss overstated, right? But now we're working with unearned service revenue, right? And if since revenues are the opposite of expenses, because I conceptually understand this, I know that just looking at unearned service revenue now earned 2,200, I know that this is going to be understated. My profit or loss is going to be understated by $2,200. Simply because the unearned service revenue is the other side of the coin, revenues and expenses. If my expenses mean my profit or loss was overstated, by affecting a revenue account means now I'm going to be understated. But in order to be able to see that from a numbers perspective, okay, so if I had unearned service revenue, okay, and I had X number of dollars in it, okay, and now I earn 2,200. That means I'm decreasing. Remember, this is a credit. The unearned service revenue, the normal balance of a liability account, is a credit. If I earn it, I'm going to decrease it, so that means I'm going to debit the unearned service revenue account, and I'm going to credit something else. I'm going to credit service revenue, right? Well, if I'm crediting service revenue, all right, that means I'm increasing my service revenue. So now instead of having 100,000, I'm going to have 102,200. Okay, and if my expenses stay the same at 60,000, okay, the difference between the two is 42,200. So now by not having put that adjusting entry in, my my profit or loss, my net income was understated because I didn't include enough revenues at the time, and so my net income is understated by 2,200. Okay, so in other words, if I increase my revenue, right, that means I'm understating my profit or loss. If I increase my expenses, that means I overstate my profit or loss. Right? So I hope you understood that, and it's relatively once you get past what the question is asking and thinking it through. Again, the word omitted was a thing that originally threw me, and as I worked through it, you saw that if I did A, then B, C, and D became relatively easy. Okay. Because I understood the concepts and how to apply it in the situation. For A, B, C, and D became exactly the same because they were all about expenses. But then when we did E, I'm doing the opposite because it was revenues. Right? So with that, again, if you don't understand something, pause and watch the video again. And if you still don't understand, contact an instructor. But I will see you in the next video for exercise 3-32B. Okay.